Be preparing big tax hikes as Germany's Scholz says Europe's biggest economy should re-implement debt limits in 2022. So already retightening or thinking about it on the fiscal side. And takeover part 2. Veolia makes a new push to buy Suez, reviving an 8-year-old attempt to create a world leader in waste and water services. Now, as European equity indexes begin to trade, let's take a look at the global macro movers screen. On the left-hand column of the GMM, you'll see the equity indexes populate as they start trading, along with Hillary's mouse icon there. In any case, the FTSE typically kicks it off, but they're not open today. So Spain's IBEX is the first one out of the gates today, up 0.5%. The DAX typically takes longer than most of the other equity indexes to open up, but we normally get the, well, there's the DAX also out, up about 0.5% this morning. We normally get the AEX out before the DAX, as well as the CAC 40, but they are a bit tardy today. Nonetheless, it looks like European equity indexes maybe taking a little bit longer to open up today because of the bank holiday in the UK. It looks like they're going to open up across the board. So we should see all, when this column is populated, all green boxes here. There you see the FTSE MIB in Milan up 0.6% as well. So European markets up higher. Joining us to talk more about what's going on is Carsten Bresky, ING Germany chief economist. And Carsten, I wanted to start with you on this common thread that I'm seeing. European governments or the UK Treasury starting to talk more and more about tightening. We hear Scholz say maybe 2022 is a good time to reimpose the debt limit. We hear that the Treasury officials want to raise taxes on Brits. Is this concerning to you, or is it just future planning that should be done now, if at any time?
Well, at least if you believe in economic textbooks, it is a concern. And why is that? Because we just take the German case. We just had a VAT reduction. We have so much fiscal stimulus out there, and this fiscal stimulus would not work if now all the governments announce that in 1 or 2 years from now there will be higher taxes. Because what's happening then? Consumers will simply not spend. Now this is the Ricardian equivalence theory that we know from the textbooks. So it is concerning. To me, in the German context, honestly, I think this also has to do with the upcoming elections next year. So a little bit of ballyhooing in order to present yourself as a still die-hard finance minister.
One optimistic signal I've seen is German Bund yields. We have seen a big gain in yields, at least last week we did, and it looks like the market is expecting maybe a stronger economic rebound here or in the core of Europe. What do you think when you look at negative 40 basis points, Carsten?
To me, this still means the market is looking for guidance. So we were in this V-shaped rebound in many countries. The market, I think, still believes in the V-shaped rebound, but the next couple of weeks will really show on the hard data then coming in for the month of July, whether this V-shaped rebound would actually also become a V-shaped recovery. And I have my doubts there because we will have so many second round effects. Look at the labor market, look at businesses going bust. So I think that this V-shape will become something like a J-shaped recovery going into the last quarter of the year.
How much of a concern is a second wave of the coronavirus? It does seem that most governments have rejected the idea of future lockdowns, but clearly the populace is worried about it. There were at least 100 to 200,000 people on the Pariser Platz and at the Siegessäule over the weekend protesting masks. How much of a concern is this?
Well, the economic outlook obviously is a concern. We see that right now governments try to keep it extremely local and regional. We've had a couple of local lockdowns already. I think what is the biggest concern obviously would be another round of the national lockdowns. But even more regional, more local lockdowns with a lot of on and off would also create so much uncertainty and fear for consumers, for businesses, that this will also undermine the recovery.
Are you seeing businesses hold up relatively well? Because there was a huge concern about a cascade of bankruptcies. Q3 was really the quarter that we were warned about by small and medium sized companies. Is that happening, Carsten?
Depends on which country and which region you're looking at. Matt, that in Germany, they just extended this the rule that you do not have to file for bankruptcy in Germany until the end of the year. So we won't get any numbers, even though businesses are in problems. So it looks also as if many governments are trying to extend these support measures, so to avoid this cliff effect. So which means right now, I think when you look at certain sectors, and this is hotels, restaurants, other service providers, so they are in problem. And it's only a matter of time until we will see the second wave of the economic impact in these sectors. And other sectors are thriving and are doing extremely well. But here it's very hard to predict because we see now many European governments coming up with second or third stimulus packages, and this obviously delays any cliff effect that we could see or that we would have normally seen already in the third quarter.
Do you see consumers out there spending? And let's focus it. We might as well focus in on Germany. I'm here. You're here. Is German consumer spending going to recover well in the second half?
Yes, German consumer spending has already recovered. In June, we were almost back to the pre-crisis level. I think what helps here is the VAT reduction by three basis points. It is also the fact that so many Germans actually went on staycation, so they stayed in their own countries. So that we had so many touristic destinations in Germany, which will benefit from German tourists coming there. So all in all, also, when you look at the shopping streets, this in Berlin, look at other bigger cities, the weekends are packed. So we will see that private consumption in a German, but probably also in a broader European context, will be the main growth driver in the second half of this year.
All right, so we see a huge drop in German GDP in Q2, and hopefully a big rebound. At least that's what the market and economists are expecting. Carsten Bresky, ING Germany chief economist, is going to stick with us. We get more from Carsten next. Japan could have a new prime minister in a matter of weeks. We'll be looking at who is running for the top job, what that means for markets, and how interesting is Japan right now. Warren Buffett certainly seems to think it's a great play. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We're looking at 10 minutes into the trading day. Gains on European equity indexes. Of course, the FTSE is closed as the UK has its summer bank holiday today. We're looking at 0.5% gains on the DAX, a little bit more than that, and almost 1% on the CAC 40 in Paris. Let's get the Bloomberg Business Flash for you. These are today's top corporate stories from the terminal. Nestle has agreed to buy Aimmune Therapeutics in a $2.6 billion deal. Aimmune makes FDA-approved treatments for peanut allergies. The Swiss consumer goods giant is paying $34.5 billion. Sorry, 34.5 shares. Let me start over again. $34.5 a share for the U.S. biotech firm, almost triple its market value. So it's going to be almost $3 billion. Nestle has been expanding its health sciences arm, shedding slower-growing businesses. Now, a deal to create the world leader in waste and water services looks on again. Veolia is offering 2.9 billion euros for a nearly 30% stake in French rival Suez. It revives an 8-year-old attempt to take over the company. Suez says its board will meet shortly to consider the offer. If it's successful, Veolia says it'll make an offer then for the rest of the company. And Credit Suisse plans to double its headcount in China over the next 5 years. The firm is accelerating its pursuit of wealthy clients in the nation, targeting a 100% increase in revenue there. Sources tell us Credit Suisse wants Asia to make up a quarter of its overall revenue, up from 17.5% today. And that is your Bloomberg Business Flash. Now let's turn to the political situation in Japan. The ruling party is set to decide the process for picking a new prime minister tomorrow after long-serving leader Shinzo Abe resigned for health reasons on Friday. Local reports put Abe's right-hand man, Yoshihide Suga, as a favorite for the top job. Here's what some of the experts who've spoken on Bloomberg Television had to say about the race for Japan's new leader.
I think Abenomics, as a total, has succeeded. And whoever takes over would continue on this policy.
I think policy continuity is key from a market standpoint or from a yen standpoint. For one, a lot of the overwhelmingly dovish monetary policy that has yield curve control, bond buying, orchestrated by Governor Kuroda at the Bank of Japan, and he still has another couple of years, a little bit more on his term left.
This political uncertainty may raise concerns in markets about a revolving door in Japan's leadership. We don't see big shifts in the near term in policy.
I don't think that there will be a discontinuity from this Abenomics to the next, because there's not much room that Japanese economy can deviate from this mainstream reformist strategy.
I don't blame him for not defeating deflation. But I think he's done a terrific job on the front of corporate governance.
Whoever takes over from Prime Minister Abe is likely to maintain that crucial relationship between government and central bank.
Still with us is Carsten Bresky, ING Germany chief economist. Carsten, let me first ask you about your evaluation of Abenomics after the longest-serving Prime Minister announced his resignation on Friday. Some of the biggest concerns were that that strategy could shift. How successful has it been?
I think it has been quite successful when you look at the Japanese growth performance. I always love to compare Japan, for example, with Italy, so two almost stagnating economies. And when you look at Abenomics, we see that actually Japanese growth had picked up prior to this, to the recent crisis, that this interaction also between fiscal policy, extremely loose monetary policies, and on top of that, some structural reforms, I think, has really helped the Japanese economy. And I think it's also a bit of an example for the European economy, which, at least when you look at the demographics, is kind of following in the Japanese footsteps.
Hillary put together a great chart for us of gross government debt to GDP, and it's just amazing that the Japanese are able to operate with this level of debt. 250% of GDP, it makes the United States look thrifty. Why, how can an economy continue with this kind of debt load?
It needs a current account surplus, so they need to be net exporter, which the Japanese economy is. You also need citizens, investors in your own economy, in your own country, actually buying Japanese debt, which is also mostly the case. And this all actually means that you're only shifting from the left side pocket to the right side pocket. So in such a situation, it can work. One, if, let's say, the Japanese economy would turn around and all of a sudden become a net importing economy, so then they would be much more dependent on foreign investors. And then I think it's very hard to see that such a debt level of north of 200% of GDP can be maintained with these extremely low interest rates.
It was interesting to read the Bloomberg story on Warren Buffett investing in these Japanese trading firms today, not necessarily because of the Japanese angle for me, Carson, but because of the commodities angle. I've been wondering for weeks why the market is bidding up some important commodities like copper. It seems to be a vote of confidence in the economic rebound. What do you think the interest in commodities is right now, and what are the chances for a really strong economic rebound, really strong demand for these commodities after we've just shut down the global economy for 3 months?
I think the interest in all these commodities obviously comes from the fact that the main theme is high tech. So moving forward, looking into this recovery, I think everyone expects that we will see a shift of the global economy away from the traditional manufacturing towards more service orientation and also more high-tech orientation. And as we all know, these high-tech products need more of the rare earth, other commodities. I think this is the let's say the trade which is played there. How high are these chances? Well, it all depends really on the second and third wave of the virus. In fact, it depends on when will we get a vaccine. I think we're still currently, the market believes in the V-shaped rebound. It is a rebound, but we need to make a distinction between the rebound and the recovery. And the recovery, like we also saw today in the Chinese PMI data, so it's more regional driven, but global trade has not really picked up. And this will really, I think, have to wait until we have a vaccine which is spread more or less globally.
Is there a chance, with this virus, Carson, already almost 1 million people around the world perished and economies shut down in basically every, Western economy as well as in Asia. Is there a chance that we get through this with just one short, sharp shock to global GDP and then continue along our merry way? Or is there going to be a problem on the other side of this with the huge debt buildup and the lack of income for consumers, companies, and governments? What does that all equal into?
I think look at the history of other pandemics, and we know we will get through it. The question is for how long. It also means, I think, because this is the first pandemic which really hits a globalized economy, so there will be structural changes. And then these changes can partly be an acceleration of trends we saw already prior to this crisis, whether it is more deglobalization, whether it's this move towards more service orientation. I think this is just a trend which will be accelerated by the crisis, but which will accompany us for a long while. It's also hard when you look, and also when you at least believe the medical experts, it is hard to believe that this is the last virus that will hit the global economy. So there will be more coming. I think we will have to prepare ourselves for the next decades that these events can happen and can happen more often. So therefore, the belief in an exclusively V-shaped rebound and recovery, well, I think this is clearly based on the assumption that this is only a hiccup and we will return very quickly to normality. I doubt it, because when you look at all the forecasts, we as others only expect most economies to return to their pre-crisis levels not before the end of 2021.
All right, Carsten, thanks very much for joining us. Carsten Bresky there, ING Germany chief economist. Now coming up, a new TikTok challenge. The app's U.S. sale is thrown into doubt after China changes the rules. Owner ByteDance is now considering its best moves. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. Right now, we are 23 minutes into the session. The UK is closed for a bank holiday, and the continental indexes, you can see they're gaining between a third and, well, a little bit more than 0.5% in Paris. Now, ByteDance will reportedly need Chinese government approval to sell its TikTok operations in the U.S. That's after Beijing added artificial intelligence technologies to its export control list. While the order doesn't explicitly mention the app, the new restrictions cover tech that's used, I should say, in TikTok's app. It's said the new rule is aimed at delaying the sale and isn't an outright ban. For more, Jody Schneider, our senior international editor in Hong Kong, joins us. So, Jody, how could these new rules hold back the ByteDance sale?
Yeah, well, the Commerce Ministry in China added speech and text recognition and personalized recommendations to this list of products that require approval before they're sold abroad. And of course, those new areas are the very technologies that ByteDance employs to make TikTok this viral sensation that it's become. So to get a deal approved, a sale approved, ByteDance now must go through the government, the sign-up process there in China. It doesn't mean an outright ban, but they would still need that approval. And so this really complicates the attempts by the companies that have deals pending, and that includes Microsoft and Oracle. They've submitted rival bids to acquire TikTok's U.S. business, while Centric Asset Management made a last-minute pitch on Friday to buy TikTok's operations in several countries. So all this now would apparently would require government approval in China.
All right, so a lot of people bidding for this asset before they heard about this rule. Maybe that looks different after. What other implications could this new rule have going forward?
Well, what's interesting here is that President Trump, this all began because President Trump said that for national security reasons, he wanted to see, he would require TikTok to be owned by a U.S. company or he would ban it. He had at first said he was going to ban it, and then he stepped back from that. And then he gave a 6-week time frame, which will take us to about mid-September. We haven't heard about that time frame lately, but of course this spurred all these bids. So if this is going to be part of the requirement here, we're at least going to need to hear something from the administration about, what their preferred timeline is. But also it calls into question whether you're going to be able to do these deals on either side. In the U.S., they've been increasingly tough on Chinese deals. It goes through CFIUS, which is that committee that looks at foreign investments for national security reasons. Also interesting here that apparently this is being claimed under national security concerns on the Chinese side when we heard the same kind of thing from the U.S. on their side. So this really becomes part of this growing U.S.-China tension.
It's so funny to look at that content at the same time as hearing the term national security concerns. Jody Schneider, our senior international editor in Hong Kong, thanks very much. Coming up, stock splits in the spotlight. Welcome back to the European Open. We are 30 minutes into the session right now. The FTSE is closed for the UK bank holiday, but continental European indexes are still up. Not the kind of gains that we saw sort of the beginning 20 minutes of the session, but we're still up 0.4% on the broader Stocks Europe 600. And if you want to take a look at the individual industry groups that are helping to add to that gain or maybe even hold that gain back a little bit, you can take a look at the group ranked returns screen, GRR Go. On your Bloomberg, you'll see oil and gas are up right now. Utilities are up. Chemicals are gaining right now, as well as automakers and auto parts makers, which is the sector that we're going to focus on in just a moment. Right now, I want to take a look at the Bloomberg First Word News. These are today's top stories from the Bloomberg terminal. This weekend saw the third death in less than a week amid racial equality protests in America. A man was shot to death in Portland, Oregon on Saturday night, a supporter of a right-wing group of counter-protesters. President Donald Trump tweeted his condolences. He plans to visit Kenosha, Wisconsin, the site of the other two fatalities, on Tuesday, despite the objections from that state's governor. Thousands gathered in Belarus yesterday, capping a third week of protests against President Alexander Lukashenko. The European Union is calling for new elections, rejecting the leader's claim of a landslide victory. According to the Kremlin, Russian President Vladimir Putin has invited him to Moscow to meet in the coming weeks. And the head of the U.S. Food and Drug Administration is promising any review of potential COVID vaccines will be transparent. Speaking to Bloomberg, Commissioner Stephen Hahn says the decision will be driven by the data alone. President Trump has said the FDA is moving too slowly, but critics fear the pressure will cause it to rush the review of a vaccine. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Now, Tesla will start trading on a split-adjusted basis today in a bid to make its shares less expensive for individual investors after the company became the world's most valuable automaker by a long shot. Meanwhile, Apple is planning a 4-for-1 stock split. Let's get more with Juliet Sally in Singapore. Juliet?
Hi, Matt. Well, really, it just shows the power of individual investors emerging as a force in these markets. We know Tesla in particular has been a strong favorite for day traders and other individual investors, something like 40,000 Robinhood traders picking up Tesla in a 4-hour span a couple of weeks ago. So this is just trying to make these very lofty valuations more accessible for individual investors. Apple, as you say, planning a 4-for-1 stock split, and Tesla a 5-for-1. They'll both begin trading Monday. Now, we've seen shares in both Apple and Tesla soar since this announcement was made, and particularly when you look at Tesla, that saw its market cap increase significantly, something like $36.5 billion added to the company's valuation in just one day. The massive rally for those shares then pricing them out of the reach for some of these smaller retail investors. So this is the reason behind the stock split. Now, Dan Ives from Wedbush, who rates Tesla the equivalent of a hold, says it is a smart move. But also, when you take a look at my GTV chart, you can see what we've seen in the moves of Apple and Tesla, but also the fact that there is some concern that you could see a lot of these lofty gains pared back once the stock split comes through. Bespoke Investment Group has looked at current companies in the S&P 500 that have announced stock splits in the last 5 years and found that from the time of the split announcement through to the effective date, the median gain was only 2.3%, essentially saying it's nothing to write home about. And that's been backed up by Susquehanna, that thinks Apple's gains could fade after the 4-for-1 split as well. Apple, as we know, has surged some 68% already this year. Matt.
Juliet, thanks very much. Juliet Sally there in Singapore with a look at these big splits. Now, speaking of Tesla, hybrid and electric car registrations soared in Europe last month. They've grabbed a record share of the autos market overall and have lifted sales to the highest in 10 months. Plug-in hybrid sales more than quadrupled, while battery electric vehicles more than doubled, according to auto market researcher Jado Dynamics. For more, Tara Patel, Bloomberg's transport editor in Paris, joins us. So, Tara, what's behind this this big boost in basically electric car sales?
Hi, good morning. Well, there are a number of factors, but I think probably the biggest that's really giving a boost to electric car sales in Europe is, first of all, pent-up demand. Consumers were stuck at home amid, very, very, very strict lockdown conditions at the beginning of the year. And then car dealerships opened up, and they orders came in, and we see the numbers have been creeping up in July and August. The second reason for this boost in electric cars is that big markets like France and Germany have piled increased subsidies to this sector because the European Union says that they want their economic stimulus plans, they want them to be green, and electric cars really fall into this. So governments are giving money to consumers so that if consumers have the money to buy a car, it's going to be electric.
Doesn't seem like they're using that money to buy Teslas, though, even though this company's valuations are eye-watering right now, and we talk about them having to split their stock to even fit in some indexes. It seems to have missed out on this big boost in European auto sales.
That's right, and analysts are saying that this was really for two reasons. That Tesla itself had some production hiccups at factories in the U.S., and this contributed to a lack of number of cars and exports to Europe. But it's also something that I think people have been watching and waiting for a number of years, and that Tesla was the first on this market, was a disruptor, but now the major car makers are starting to catch up. They're piling in their offering. Peugeot, Renault, VW has embarked on one of the car industry's biggest push into electric cars. They're trying to flood the market with more affordable models, so consumers just have way more choice than they had previously when it was, Tesla or nothing.
I will be test driving a Porsche Taycan for exactly 30 minutes tonight. I'll give you my first impressions when I'm done. Tara Patel, thanks so much for joining us, our transport editor out of Paris. Coming up, the rise and fall of Wirecard. We'll look into what happens next to the disgraced German payments company. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. We are 40 minutes into the session right now, and we're looking at gains across European equity indexes. The FTSE right now is closed, or will be closed the entire day for a UK bank holiday, but you can see the DAX gaining 0.6%, the CAC 40 up 0.7% in Paris. Now, Wirecard's collapse has kicked off a scramble for the fintech company's assets. Wirecard UK will sell its card technology, associated assets, and transfer client relationships to Railsbank Technology. Meanwhile, here in Germany, Deutsche Bank has submitted a bid for some of Wirecard's assets in its home country. Joining us now is Nigel Verdon. He's the CEO of Railsbank Technology, and they are buying those UK assets. Nigel, thanks for joining us this morning. Can you tell us any specifics about numbers? How much are you paying? What are you getting?
Unfortunately, we can't disclose the amount we're paying, but what we're getting is the customer base, the card holders, some technology, and also some of the employees as well, and to join Railsbank. The reason for that is one, to try and bring some stability back to the fintech market in the UK, because this has been quite a devastating situation, and we need to see if we can make sure we have an orderly market and get confidence back again.
It is, Nigel, also a fairly opaque situation. Not exactly sure what went wrong and what the legal ramifications are going to be in the future. How do you avoid liability when assuming these assets for future legal risk?
Sure, that's a very good question. Well, most of the issues are in the Wirecard, what's called acquiring business. It's where you take cards in restaurants, on terminals, or online, and that is where most of the liabilities exist. The card issuing business, where you essentially print bits of plastic that people use, was only about 5% of the Wirecard business globally, and the UK was the largest percentage of that. And so that we believe that the liabilities are considerably less within the issuing business than they were in the acquiring business. How do we actually minimize that? We've bought the assets as opposed to buying the underlying equity, and as the underlying equity will, over the next few months, have an orderly shutdown.
Let me ask you about those assets, and specifically the technology, Nigel. How would you judge the quality or the competitive advantage of the technology you've acquired compared to competitors?
So we'll acquire a very, very small piece of technology. So in our total technology estate, it'll be about 2% of it. So that just gives us some operational efficiency internally. I think what the real advantage that we get is with the customer base and the card holders, because that puts us to be pretty much the #1 banking as a service provider across Europe.
Has as someone, a consumer who loves to foray into these fintechs versus traditional banking, I was a little bit put off by the whole Wirecard scandal, and I'm guessing a lot of other consumers were as well. Do you think this particular scandal, especially here in Europe, has set fintech's advantage back a little bit compared to Main Street brick and mortar banks?
It's a very good question, and it certainly has. This is fintech's Enron moment in the industry. And one of the reasons we did step in was to try and bring our reputation in the industry. And if you look at people on our board, we have former US Fed and US Treasury members on our board. So to be able to bring stability to this. So if I was a card holder, I would be concerned. My message, though, is we're going to take this consciously, make sure everybody has a good outcome, and treat everybody with dignity, to ensure that the confidence is back in the fintech arena as well. I've been in this industry since the 1990s. My first company was in 1996 when this internet thing appeared. The second one was Currency Cloud, was a big global foreign exchange business. So we've got some background that and the team's been with me since the 1990s. So I think we've got some credibility, and reputation that can bring some confidence back. And I appeal to the card holders, please bear with us. You are top of mind for us.
All right, Nigel, thanks so much for joining us. Nigel Verdon there, the CEO at Railsbank Technology. They have acquired the UK assets of Wirecard. Now, the billionaire founder of one of China's biggest conglomerates is optimistic about that country's economy despite the Sino-US tensions. Fosun chairman Guo Guangchang is also eyeing opportunities in Southeast Asia, Brazil, and Africa. He spoke exclusively to Bloomberg.
First of all, Fosun indeed covers a wide range of business, but we concentrate on family consumption, health, happiness, wealth, so our business is very focused. Particularly in recent years, we have been more and more focused. Secondly, I'm very confident in China's economy. China has a large middle class, so there's huge domestic demand. Also, China's industrial chain is very strong in global competition. For the future, our Chinese business will still be the priority and the most important for Fosun. We sense that there is huge growth potential.
We're obviously seeing tensions between Beijing and Washington rising, and there's also trade friction between Beijing and Australia, Canada, also India. How much of a headwind are those tensions for a business like yours?
我也不相信，就是说，有一些在竞选过程当中，一些
I don't believe some extreme voices during the election campaign can represent the future of the US-China relationship. I believe they will find a solution in future. Secondly, Fosun complies with local laws in our global positions. We are very friendly to local communities, so all of our investment and business development are welcomed.
所有的投资、所有的发展、业务的发展都是受到欢迎的。在投资方面
In terms of investment, we will focus more on strengthening our industry in the future instead of expansion. So we will concentrate on strengthening our existing businesses in regions we are already in.
The broader business, you've got debt-to-capital ratio of about 56%. That's increased a little bit. It's not at dangerously high levels. Are you comfortable with debt levels at around that ratio? And are you looking to raise additional funds either via stock issuance or bond issuance or loans?
我们一直会坚持一个比较稳健的一个财务的政策。
We will maintain a prudent financial policy, so we are comfortable with the existing debt ratio. We won't aggressively change our financial strategy, but of course we won't be too conservative. Over the past few years, we've tried to get a balance between investment and debt, which means we have investments, but we also have exits.
投贷平衡，就是我们有投资，但也有退出。多渠道方面的话，我们
In terms of multi-channel financing, we have both bonds and stocks. In terms of regions and currencies, we have financing in the Chinese yuan in mainland China and financing in US dollars overseas. That gives us more and safer sources of funds. One of the most important development strategies for Fosun's future is to maintain prudent finance and adequate cash flow.
我们现金流的充分。
Which parts of the world, as you look out across the globe, look most enticing to you right now as an investment opportunity?
其实巴西我们还是做了不少步。
We have taken a position in Brazil. We are optimistic about its future development. Southeast Asia is a place where we don't have strong investment, but we will strengthen there. Apart from that, Fosun's Artisan, the treatment for malaria, has made a great contribution in Africa. It is called Almighty Medicine there. I think Africa has been facing a huge challenge, in particular from this coronavirus pandemic. We hope we could do more for Africa.
10 years down the line, 10 years from now, where do you hope Fosun to be 10 years from now?
Fosun has a plan to grow 10 times in 10 years. We hope in the next decade our overall business will see 10 times growth, big growth in the customers we are serving. More importantly, we will also bring them better products and better services.
That was Guo Guangchang, the chairman of Fosun International, speaking exclusively to Bloomberg Markets co-anchor Tom McKenzie. Up next, potential U.S. tax hikes and an end to the government's furlough program in the autumn is a key question. What happens when the fiscal pump runs dry in Britain? We'll discuss with Bloomberg MLive's Richard Jones. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Open. 52 minutes, 53 into the session, and we're looking at gains across Europe. The FTSE is closed for a UK bank holiday. Let's take a look at what's moving markets with Richard Jones, our MLive FX and rate strategist here in Berlin. And Richard, you know, it's amazing when people, issue warnings about valuations. It doesn't really seem to matter. We continue to hit new highs in U.S. stocks and tech stocks, and the rally carries through to Europe as well.
Yeah, good morning, Matt. Well, yeah, I think in the short term, stocks everywhere across the globe, they're loving the lower for longer monetary policy backdrop. I mean, I think the Fed underscored support of longer term monetary policy last week. I think that means that stocks probably continue to grind higher because there's so much liquidity in the system. That liquidity needs to find a home in a world where further gains, like in fixed income, for example, look challenging. So equities are a great home for all this excess liquidity, and I think it's going to continue. Now, where I think we might run into a little bit more of a challenge is on the fiscal side, because I'd argue that what we saw in the spring, one of the big reasons for the lift in the global economy and for the jobs market was from the fiscal and monetary policy support that we received all over the world. We saw it in Europe, we saw it in the UK, in the US. It now looks like that's not going to be as, we're not going to get as big of a lift from the fiscal side going forward than we did in the past. And I think if you look at the news flow in the UK this weekend, potential UK tax hikes are being discussed to pay what's already been put in place. So it looks like the government's furlough program is going to end in the autumn, and I think that raises a key question, not only in the UK but in other parts of the world. We'll be dealing with the same thing: is what happens when the fiscal pump runs dry and monetary policy is the only game in town. I think in the short term, monetary policy can continue to lift stocks. I mean, when the central bank music is playing, everybody's going to keep dancing. But as we look ahead, I don't think we're going to see the same support on the fiscal side. So I think it's going to be more challenging to maintain momentum with only monetary policy doing all of the heavy lifting going forward, Matt.
Well, it's not just the UK. Here in Germany, where we say fall and not autumn, you've got the finance minister talking already about imposing debt limits. Is that a concern as well?
Well, I think anything that puts a lid on fiscal spending, which I think has been as important as monetary policy in sort of lifting the economy and stock markets and I think sentiment across businesses since the spring, it's been very much a two-pronged assault from policymakers. So the fiscal side and the monetary side have been necessary. Anything that makes that fiscal imperative less acute than it was in the spring, I think makes it challenging going forward economically, because I think COVID is still very much a reality. I don't think that we've solved those problems either on a public health or on an economic viewpoint. So I think anything that limits fiscal spending in the future will make it very, very difficult for the economic recovery to continue.
Richard, thanks very much for joining us. Richard Jones, our MLive FX and rate strategist out of Berlin. You can check out his work on the MLive blog. Just type MLIV Go on your Bloomberg terminal. Now, I am headed over to Bloomberg Radio. If you're in London, you can switch over and listen to that on DAB. Anywhere else in the world, just Google Bloomberg Radio.
Equities push higher as investors still digest the Fed's new inflation views. Japanese stocks outperform, boosted by Berkshire Hathaway's purchase in 5 major companies. China's economic rebound presses on, with the gauge of the services industry at the strongest level since early 2018. In the meantime, you've got Japan. They're still contemplating life after Abe. And another hurdle for TikTok. ByteDance is said to need approval from Beijing for the sale of TikTok's U.S. operation. Welcome to Surveillance. I'm Yusuf Ahmedin in Dubai. We are higher in the Asian session, and we had the record highs on Wall Street late Friday, and all of that positive momentum is carrying into the European equity story as well, and into U.S. equity futures still in the S&P 500 mini. You are looking here at a bit of lighter liquidity. London markets are closed for a public holiday. The DAX leading some of those gains in Europe, throwing up about 0.7%. The Bloomberg Commodity Index is another highlight here as you try and craft a narrative for the coming hours, extending a rally after hitting the highest since 2018. Much of it has to do with the ailing dollar. So the rally being led by iron ore, it's being led by Brent. Raw materials is a broad church, but they're all priced in dollars. That's what they have in common. U.S. 10-year yields, we're at 71 bips. Again, drifting lower, poor volumes. It's the last trading session of the month as well. And then in the FX space, it's the yen that is a little bit weaker here after traders unwound long positions from Friday, which is prompted by the news that the Prime Minister is going to be resigning. We're just short of the 106 handle. Let's get to some of the other stories we're watching. The Bloomberg First Word News with Leanne Garrans. Good morning, Leanne.
Good morning, Yusuf, and thank you. This weekend saw the third death in less than a week amid racial equality protests in America. A man was shot to death in Portland, Oregon on Saturday night, a supporter of a right-wing group of counter-protesters. President Donald Trump tweeted his condolences. He plans to visit Kenosha, the site of the 2 other fatalities, on Tuesday, despite the objections of the state's governor. Now, here in the UK, Conservative lawmakers are criticising the idea of increasing taxes to plug the country's budget deficit. That's after news reports over the weekend that the Treasury is considering the move. The Telegraph says officials are trying to raise at least £20 billion a year. One idea is aligning capital gains tax with income tax. The Times reports another is hiking corporation tax. And the race to succeed Japanese Prime Minister Shinzo Abe is now getting underway. According to local media reports, 2 of the top candidates are longtime Cabinet Secretary Yoshihide Suga and former Defense Minister Shigeru Ishiba. Opinion polls point to Ishiba, but if the election process involves mostly lawmakers, momentum could swing to Suga. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Garrans. This is Bloomberg. Yusuf.
Thank you very much for that, Leanne Garrans. Well, some economic data hitting the ticker from Italy. The Italian economy contracted 17.7% in the second quarter from a year ago, and that's 12.8% of contraction in the second quarter from the previous quarter. Currently, Eurodollar 118.92, just a little bit lower here, about 0.1%. In terms of some of the other data that we've been getting, of course, from China and Japan, I mean, that really underscores some of the signs that Asia's biggest economies are recovering in the interim. So China's economic activity, just to give you the full rundown, continued to rebound in August with non-manufacturing PMI at the strongest level since early 2018. Manufacturing PMI softened slightly to 51 from 51.1 a month earlier. Joining us today is Eric Nielsen. He's the Group Chief Economist at UniCredit. Eric, welcome back to the program. In terms of those numbers, the PMIs, do they really fully confirm that the Chinese economic recovery is underway?
Hey, good morning. I'm not sure that's the right interpretation. Yeah, no, as you hinted, it's not so clear. It's good news for sure, sort of overall, but the 2 things I worry a little bit about is that these indices, the PMI, showed that the smaller companies are still struggling. It was mostly driven by bigger companies, so they are sort of the one that get some push or help from the governments. By the underbelly of the Chinese economy still seems to struggle a bit. The other issue I worry about is that you saw them driven more by production, while demand is still lingering behind. This is also the first part of the V recovery in China that we saw very strong production increases, but demand still hesitating. So companies produce into inventories, and if demand doesn't pick up, then this is going to be short-lived. So I still think there are a lot of question marks out there.
Eric, look at the dollar-yuan trade, and we are now at the lowest level since January, since pre-COVID. Is that really an indicator of reduced U.S.-China tensions, or is that more of a reflection of what's happening with the economy? Because it's a very surprisingly low level.
Yeah, I think, it's tough to say, because I belong to those who are not completely sure that cross is a free market setting things. The Chinese are clearly watching it quite carefully. But we are in a period, I think, where we see general dollar weakness, and we've seen it in euro dollar also, right? And this has to do with, I think, both a lot of question marks about the U.S. economy, about U.S. policies and politics, and the Fed being very aggressive, and rightly so in many ways. So I think that's sort of probably, for me at least, the key FX story globally now.
And just a quick thought on these U.S.-China tensions, because ByteDance is now saying that basically the U.S. needs to get approval, or that Chinese approval is needed for this TikTok sale. Basically throwing a wrench into some of those plans. Are we going to see more of that kind of retesting of relations as we get closer to Election Day in the United States?
Yes, without a doubt, and beyond, right? I think there's a lot of people in the market, I hear, sort of identify Trump with the tension between America and China in technology, but it's much deeper than that. He's more like a proponent of that underlying move towards greater tension. And I don't think there's any reason to think that a Biden administration would be softer on China, but maybe obviously speak differently and try to cooperate in a more systematic way, maybe. But fundamentally, we are in a major, in my opinion, in a major multi-year phase of tension between these two giants, and it plays out in the technology world. And I hope it doesn't blow up with sanction against each other too much, but that's a big risk, obviously.
Eric, hold that thought. We still have a lot to get through. That's Eric Nielsen from UniCredit. He stays with us. In fact, let's get you a bit of a snapshot of what is around the corner. U.S. stocks, they keep hitting a record after record, driven by gains in tech stocks. Is the rally really sustainable? Does it reflect a certain level of, a reasonable view of the world? We'll get into that next. This is Bloomberg.
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Yusuf Gameluddin in Dubai. Well, let's get you up to speed with the Bloomberg Business Flash with Leanne Garens again. Leanne.
Hello, Yusuf. Another roadblock to a potential TikTok deal. Sources tell us Bloomberg that due to a new rule in China, ByteDance will need government approval for a sale. Beijing added AI technologies and those that analyze data to make personal recommendations to an export control list. We're told the rule is aimed at delaying the sale and isn't an outright ban. Now a deal to create a world leader in waste and water services. Veolia is offering 2.9 billion euros for a nearly 30% stake in French rival Suez. It revives an 8-year-old attempt to take over the company. Suez says its board will meet shortly to consider the offer. If it's successful, Veolia says it will make an offer for the rest of the company. And Credit Suisse plans to double its headcount in China over the next 5 years. The firm is accelerating its pursuit of wealthy clients in the nation, targeting a 100% increase in revenue there. Sources tell us Credit Suisse wants Asia to make up a quarter of its overall revenue, up from 17.5% now. And that's your Bloomberg Business Flash. Yusuf.
Thank you very much. We have some more breaking news hitting Bloomberg, this time from a flight from Tel Aviv, from Israel. So this is the El Air International Airways that's headed to Abu Dhabi as we speak. And we understand that the El Al pilot has said that the flight to Abu Dhabi is going to fly over Saudi Arabia, and that will be the first public acknowledgement of an Israeli aircraft going through Saudi Arabian airspace in decades. This is really part of this rapprochement, the ongoing negotiations between Israel and the United Arab Emirates in terms of formalizing a peace deal that would have a ripple effect, major ramifications across the region and beyond. We'll keep a close eye on this plane as it gets closer and closer to its destination in Abu Dhabi. Now, in the meantime, the S&P 500 looks set to continue pulling higher with futures pointing to gains. This after having its best week in 8 as the Fed's new policy goals rippled through markets. Meanwhile, the bond market reflation bets that have proven popular in the recovery from the March lows now face tougher odds. So a test of the reflation trade. Eric Nielsen still with us from UniCredit. Let's get straight to it. GTV Go for our clients. You're seeing your U.S. 10-year break-evens. They're back to those pre-COVID levels. And for the folks at Vanguard, for there to be more momentum in that, it's not just about the Fed talking. You need the economy that's got to do the walking as well. Agree or disagree?
Yes, for sure. I mean, we are in a very peculiar way where markets, on the one hand, seem to believe that the economy is coming back, the V-shaped type of more or less picture, and the market also trades on an anticipation on continued sort of pedal to the metal monetary policy, full steam ahead, and that sort of explains probably a lot of where we are now in terms of the equity indices, and for the time being, it seems the right one. I'm more worried about the steadiness of the economic recovery. I'm more convinced about the continued commitment by the central banks.
Is the Fed going to continue being more aggressive than the ECB? And what does that mean then for euro-dollar?
Yeah, so my view would be that what we learned from the Fed last week was that we are beginning to approach the end of inflation targeting and moving more to a more sort of a judgmental call to fundamentally support the economy. And the ECB will follow. They will call it something else, but the ECB will do something very similar when their review is concluded. So I think when you come to the issue of euro-dollar, you want to think about which of these two major central banks would be more aggressive and which one would be better at explaining it and convincing people that they are in that game. And there I think that my money would be on the Fed, and that means that euro-dollar moves higher. So I think we're heading into a period of euro-dollar in the 120, 130 range over the next several. Well, it will probably happen very soon, and that's where we're going to stay for quite a long time, I think.
As we look to some of the U.S. equity futures in the United States, I mean, pointed again towards fresh records in many cases. And then I look at the size of U.S. tech, and this is another chart that our clients can pull up, and compare that to Europe's stock market. I mean, all of Europe combined is as big as U.S. tech in terms of the market valuation. I mean, at some point, that has to become a liability to the stability and proper functioning of these markets.
Yeah, it's stunning, isn't it? I totally agree with you. But let me say two things. In terms of the tech, which has been phenomenal, I would caution a little bit, right? I mean, there's no question that tech is the future, and the American companies are amazing companies in many ways. But we are, as we talked about before the break, we are almost certainly entering a long period with lots of tension between America and China, and it will play out almost certainly in the tech industry, right? So how that then plays out for the few amazing companies in America, I don't know, but a big question mark. And number two is that if you get a Biden administration, I wonder whether a Democratic president and maybe also Congress will sit back and relax as much as the president and previous governments have done in America with these near monopolies in these areas. So I think there's a lot of question marks. Amazing companies for sure, but I think people are a little bit too blindly following the logic that the technology will be the future, and it will be, but how it plays out for these companies, I still think have a lot of question marks, for me at least.
I mean, you bring up these U.S.-China tensions, and you talk about U.S. stocks, and then the question becomes, well, is the ongoing weakness in the greenback going to be a driver, a catalyst for additional upside? It's become the trade du jour. Everybody seems to be suddenly a dollar bear. Are you one of them?
Yeah, I mean, moderately so. I mean, I think we are. If you think about it in a very sort of fundamental economics way, right? I think most people would agree that a equilibrium between your dollar is somewhere around where we are now. You make it 117, 120 or something, but few people would say it's far away from that range. Now you look back, and you've had basically since early 2018, I guess, you have had sort of a swing away from that fundamental value, and if you then sort of project from that point of view the periods where the pair goes on one side of the equilibrium to the other, it would be very normal and in line with history that we are now heading for a period of a time where the euro is going to be a bit overvalued, and that's why I'm saying you're probably easily going that 120, 130 ratio. But also, as we talked about, and you mentioned just before, the Fed is probably more likely to be on an aggressive road than the ECB, and that supports that view also. So yeah, I'm in that big kind of fundamental camp of dollar bears.
I mean, as we look for opportunities in these markets, you mentioned European equities. I mean, arguably better valuations than their U.S. peers, a little bit of catching up to do. But you could also argue that the commodities complex has quite a bit of catching up to do, and we're seeing it right this minute across the board, from Brent crude all the way to iron ore. Is that where the next leg up could come from?
Yes, I think that's exactly right. I mean, if you have, I mean, there is not always consistency between markets, but usually there is, and this isn't a good example of it. You have a fundamental weakness on dollar, and you have an economy that I'm still in the camp that thinks that it's going to be a bumpy road back to the levels we had before in GDP terms before the pandemic started. But we are heading that way over the next 12, 18, 24 months, or thereabout. So that's sort of good enough. And then given the dollar story, you have the upside in a lot of the commodity space. I think that's exactly the way to think about it in a sort of a fundamental economics way.
Eric, I always enjoy our conversations. Really appreciate the time you've made in your schedule. That's Eric Nielsen. He is the Group Chief Economist at UniCredit. All right, well, we're going to be talking about the TikTok challenge next. That's as the app's U.S. sale is thrown into doubt after the U.S. changes its rules. The owner ByteDance is now considering its best move. This is Bloomberg. You're watching Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. Well, let's get into more detail around ByteDance, because they will reportedly need Chinese government approval to sell their TikTok operations in the United States. And that's after Beijing added artificial intelligence technologies to its export control list. Well, let's get more on this with Jody Schneider, our senior international editor in Hong Kong. Jody, how could this then really disrupt the plans for the ByteDance transaction?
Well, it really could either delay it or really, kind of throw a wrench into the whole deal, because the new areas that have been added to these tighter restrictions on artificial intelligence exports are the very technologies that ByteDance uses to make TikTok this viral sensation. So it would be required to seek the government's sign-off, the Chinese government's sign-off on any deal, though a person familiar with the matter told us they doesn't think it means an outright ban, but it really could delay or, potentially upend this deal. And we're seeing several bids that have already been put in. We saw the bids from Microsoft and Oracle. They submitted rival bids, and Centrica's Asset Management made a last-minute pitch on Friday to buy TikTok's operations in several countries. And of course, President Trump and the Trump administration want this sale done pretty quickly. That's something that they've said they would require if they were not to ban TikTok in the U.S.
Jody, as we think about the implications of those rules going forward, is the risk here that we move out of the risks to some of the software developers and more towards hardware, advanced chip manufacturing maybe? Is that the real threat?
Yeah, and it also raises the stakes further with these tensions between China and the U.S. China is saying that they're looking at these technologies for security reasons, and the U.S. is saying that President Trump is saying that he wanted to block TikTok's Chinese-owned ByteDance from operating in the U.S. Over national security concerns. So you could see how this could continue to spiral if each side is saying, well, you can't do this because we're concerned about national security or information security. So one could see this, becoming
Jody, thank you very much for that. We're a little bit squeezed for time. Jody Schneider, our senior international editor in Hong Kong. Plenty more ahead. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, and politics. This is Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. Let's get you the Bloomberg First Word News again with Leanne Garrett. Leanne.
Good morning, Yusuf. The head of the U.S. Food and Drug Administration is promising any review of potential COVID vaccines will be transparent. Speaking to Bloomberg, Commissioner Stephen Hahn says the decision will be driven by the data alone. President Trump has said the FDA is moving too slowly. Critics fear the pressure will cause it to rush the review of a vaccine. Thousands gathered in Belarus yesterday, capping a third week of protests against President Alexander Lukashenko. The European Union is calling for new elections, rejecting the leader's claim of a landslide victory. In the last few moments, Lithuania's president has said the Baltic states will start sanctioning individuals in Belarus. And this weekend, Berlin faced protests against the government's coronavirus restrictions. Police arrested about 200 demonstrators after marches did turn violent. That was on Saturday. Broadcaster ARD estimates around 38,000 people did take part. Politicians expressed a shock after some protesters broke through fences and reached the stairs to Berlin's Reichstag. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Yusuf.
Thank you very much for that, Leanne Garrans there. Well, let's turn to the political situation in Japan. The ruling party is set to decide the process for picking a new prime minister tomorrow after long-serving leader Shinzo Abe resigned for health reasons on Friday. Local reports put Abe's right-hand man, that's Yoshihide Suga, as a favorite for the top job. Here's what experts Bloomberg has spoken to have to say about the race for Japan's new leader.
I think Abenomics, as a total, has succeeded. And whoever takes over would continue on this policy.
I think policy continuity is key from a market standpoint or from a yen standpoint. For one, a lot of the overwhelmingly dovish monetary policy that has, yield curve control, bond buying, orchestrated by Governor Kuroda at the Bank of Japan, and he still has another couple of years, a little bit more on his term left.
This political uncertainty may raise concerns in markets about a revolving door in Japan's leadership. We don't see big shifts in the near term in policy.
I don't think that there will be a discontinuity from this Abenomics to the next, because there's not much room that Japanese economy can deviate from this mainstream reformist strategy.
I don't blame him for not defeating deflation. But I think he's done a terrific job on the front of corporate governance.
Whoever takes over from Prime Minister Abe is likely to maintain that crucial relationship between government and central bank.
For more, we're now joined by Bloomberg's Sophie Jackman in Tokyo. Sophie, let's get to the leadership election, and the list of candidates and potential successors is surprisingly short.
That's right. I mean, there's a lot we don't know about this election. A lot is being kept under wraps. But media reports suggest that because of the ongoing crisis with the coronavirus and the desire to avoid a leadership vacuum, Abe's party, the LDP, will take a fast-track, a crisis version of its normal protocol. And that means the rank-and-file party members around the country won't get a say. It'll be down to the sitting lawmakers. And they are very tightly bound by intra-party factional loyalty. That's bad news if you're someone like former Defense Minister Shigeru Ishiba, popular with the public, but he hasn't won over those factions. And it's good news for Chief Cabinet Secretary Yoshihide Suga. He doesn't have his own faction, but what the reports we've seen suggest those factions are coalescing behind him. And so the decision about who will take over from Abe is really being made right now. Suga is often described as Abe's right-hand man. He's had that position of Chief Cabinet Secretary since 2012, and it's a position that really has two sides to it. There's a public side. We see him in the press room twice a day explaining the government policies, and then there's a side that we don't see, which is very much about maintaining party discipline. And we can argue about how well Suga has done at both of those things, but the proof of the pudding is really the fact Abe is still here after nearly 8 years. Only his health brought him down in the end.
A lot of the investors we've spoken to appear to reach a type of consensus that we're going to see more of the same when it comes to monetary policy and fiscal policy. So that raises the broader question as to how is Suga going to differentiate himself from Abe?
That's right. I mean, when it comes to economic and fiscal policy, we expect him to inherit much of the mantle of his predecessor. And some of that stuff, some of the pillars of Abenomics are not really up to him. It has more to do with the Bank of Japan. But I can't say enough what a difference this selection of leader would make for the Japanese political world. In the Liberal Democratic Party, which has held power for almost all of the post-war period, if you want to be the leader, you have to be either a prime minister's son or a prime minister's grandson, as Abe was. And Suga is neither of those things. He's one of the few self-made men in that party, hailing from Akita Prefecture, from the rugged north. And for the party to be uniting behind someone like that suggests that some change may be afoot in what can often seem like a very static political scene.
In terms of the domestic picture, what are some of the other challenges that Abe's successor, and whoever that may be, is going to have to deal with?
That's right. Whoever it is will obviously inherit an economic crisis. The Abe administration's response to COVID-19 has at times been lauded overseas. It's been less popular domestically. And the Prime Minister, whoever it is, will have to start preparing for an election of Japan's lower house, the more powerful House of Representatives and the bicameral parliament. And that will happen no later than October next year. Now, as we've seen Suga as Chief Cabinet Secretary, we know he's proven himself that he can push through domestic policies, he can negotiate domestic policies. But what we're waiting to see, and I think voters are waiting to see, is how diplomatically he's going to handle the relationship with the US, with the incoming administration, and with China. He's looking to lead a country that is very much increasingly stuck in between those two giants, and it remains to be seen how he plans to do that.
Sophie, a lot of insights there. Thank you for that. That's Sophie Jackman there, live from Tokyo. Up next, an optimistic outlook, our exclusive interview with the billionaire founder and chairman of Fosun International. He speaks about China's economy and investment opportunities as well. This is Bloomberg. watching Bloomberg Surveillance. I'm Yusuf Gameluddin in Dubai. Some corporate news hitting the Bloomberg from Orange, that is the French telco, the giant of the industry. They're coming through then with some comments in an interview that Bloomberg has conducted with the chief executive officer. They're saying that the objective is to lift the dividend in 2020 to 70 cents.
Shedding slower growing businesses. And Warren Buffett's Berkshire Hathaway is betting $6 billion on Japanese trading firms. The investment giant has taken stakes in 5 of the country's biggest trading companies. It's one of its largest ever forays in Asia's second largest economy. The stakes include about 5% in Mitsubishi and Sumitomo. And that's your Bloomberg Business Flash. Youssef.
Thank you very much for that, Leanne Garrens there. Now, the billionaire founder of one of China's biggest conglomerates is optimistic about the country's economy, even amid escalating Sino-US tensions. Guo Gongchang spoke exclusively to Bloomberg Markets co-anchor Tom McKenzie at Fosun's Shanghai headquarters. Take a listen.
First of all, Fosun indeed covers a wide range of business, but we concentrate on family consumption, health, happiness, wealth. So our business is very focused. Particularly in recent years, we have been more and more focused. Secondly, I'm very confident in China's economy. China has a large middle class, so there's huge domestic demand. Also, China's industrial chain is very strong in global competition. For the future, our Chinese business will still be the priority and the most important for Fosun. We sense that there is huge growth potential.
We're obviously seeing tensions between Beijing and Washington rising, and there's also trade friction between Beijing and Australia, Canada, also India. How much of a headwind are those tensions for a business like yours?
I don't believe some extreme voices during the election campaign can represent the future of the US-China relationship. I believe they will find a solution in future. Secondly, Fosun complies with local laws in our global positions. We are very friendly to local communities, so all of our investment and business development are welcomed. In terms of investment, we will focus more on strengthening our industry in the future instead of expansion. So we will concentrate on strengthening our existing businesses in regions we are already in.
The broader business, you've got debt-to-capital ratio of about 56%. That's increased a little bit. It's not at dangerously high levels. Are you comfortable with debt levels at around that ratio? And are you looking to raise additional funds either via stock issuance or bond issuance or loans?
We will maintain a prudent financial policy, so we are comfortable with the existing debt ratio. We won't aggressively change our financial strategy, but of course we won't be too conservative. Over the past few years, we've tried to get a balance between investment and debt, which means we have investments, but we also have exits. In terms of multi-channel financing, we have both bonds and stocks. In terms of regions and currencies, we have financing in the Chinese yuan in mainland China and financing in US dollars overseas. That gives us more and safer sources of funds. One of the most important development strategies for Fosun's future is to maintain prudent finance and adequate cash flow.
Which parts of the world, as you look out across the globe, look most enticing to you right now as an investment opportunity?
We have taken a position in Brazil. We are optimistic about its future development. Southeast Asia is a place where we don't have strong investment, but we will strengthen there. Apart from that, Fosun's Artisan, the treatment for malaria, has made a great contribution in Africa. It is called Almighty Medicine there. I think Africa has been facing a huge challenge, in particular from this coronavirus pandemic. We hope we could do more for Africa.
10 years down the line, 10 years from now, where do you hope Fosun to be 10 years from now?
Fosun has a plan to grow 10 times in 10 years. We hope in the next decade our overall business will see 10 times growth, big growth in the customers we are serving. More importantly, we will also bring them better products and better services.
That was the Fosun founder and chairman, Guo Guangchang. Let's circle back to the market action because we have, again, a firm risk-on rally on the way, especially in equities. And that comes off the back of what we saw in terms of the record highs in the U.S. late Friday, and a lot of positive momentum getting carried through into the Asian and now into the European session. Remember, the London markets are closed for a public holiday, so we're a little bit lighter liquidity. The DAX leading gains, about 0.8% higher. The other highlight comes through from the Bloomberg Commodity Index. So as the dollar weakened over the last couple of trading sessions, that's starting to help give the commodity complex a bit of a lift up. But the dollar's actually reversed some of the earlier losses, so we're actually higher on the Bloomberg Dollar Index. The U.S. 10-year at 71 basis points. Remember that we're not going to see the kind of issuance that we saw last week from the Treasury. That's going to have an impact. Dollar-yen, the mover in the FX space, just short of that 106 handle. Quick line on some remarks that the managing director of the IMF is currently giving in an online address. And she is saying that she is seeing a revival of trade and also some commentary on a potential second stimulus that should go into climate and education. We'll keep a very close eye on the remarks of the managing director, Georgieva, who is speaking at this very minute. Coming up, the rise and fall of Wirecard. We will look into what happens next to the German payments company. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, and politics. This is Bloomberg Surveillance. I'm Yusuf Gameneddin in Dubai. History is being written as a plane from Israel has now entered Saudi Arabian airspace en route to Abu Dhabi as the United Arab Emirates and Israel continue to firm up the initial agreements that were reached in what was, of course, a absolutely landmark deal to reach a peace treaty. That is the ultimate goal. It has never happened before that there has been an Israeli aircraft, a commercial aircraft, that has gone through Saudi airspace, at least none that's really been publicly acknowledged. So now the red headline hitting the Bloomberg that it's actually physically entered the airspace, and we will continue to keep a close eye on this. Now, let's get to Wirecard, because the collapse has kicked off a scramble for the fintech company's units. Wirecard UK will sell its card business and that technology and associated assets and transfer the client relationships to Bank technology. And over in Europe, Deutsche Bank has submitted a bid for some of Wirecard's German assets. We'll help untangle all of this and recap the timeline of the Wirecard scandal. Bloomberg's Danny Berger is tracking the period from when the payment company entered Germany's benchmark DAX index up until the arrest of the company's CEO, Markus Braun, in June this year. Take a listen.
Wirecard was a German dream. Welcomed into its blue-chip DAX index, it gave hope to the country's beleaguered finance industry and showed it could do tech. But in less than 2 years, Wirecard was insolvent, its CEO under arrest. Celebrations of Wirecard entering the DAX were soon punctured. The Financial Times reports an executive in the Singapore office is suspected of forging contracts. Bearish bets pile up. German financial regulator BaFin bans shorts, a first for a single stock in Germany. 2 months later, the ban was lifted, but by the fall of 2019, more doubts over accounting practices had piled up. To calm investors, Wirecard hired KPMG for an independent audit. Shares jumped on the announcement. Come the final report, something is missing. Over $1 billion of revenue. The reason? Internal shortcomings. Wirecard CEO Markus Braun rejects reports of accounting irregularities. But by June, the company's defenses are starting to unravel. Prosecutors launch a criminal investigation into Braun, and police raid the company's office. Wirecard admits the missing $2.2 billion of assets probably doesn't exist, and the next day, Braun is arrested. Falling from darling to delinquent, Wirecard has caused scandal back in Germany. With the political repercussions still playing out, regulator BaFin is accused of being asleep on the job. Finance Minister Olaf Scholz has called the scandal a wake-up call and pushed for tougher regulation. But with questions continuing about the government's oversight, Wirecard could still prove to be a political nightmare for Berlin.
That was Bloomberg's Danny Berger on the rise and fall of Wirecard. But let's stay with that subject to get some more perspective. And joining us now is Bloomberg's tech reporter, Sarah Syed. Sarah, what do we know then about the UK's Bank deal?
Well, you had an insolvency administrator that was appointed over part of Wirecard's assets, and this administrator was looking for quite a speedy hive off of some of the more, I guess if you want to say, profitable business or not loss-making businesses. So the UK Card Solutions operation and associated assets were sold to Bank, or an agreement was made to sell to Bank. I guess a small global open banking platform, and so that was quite a speedy sale to them. We're not quite sure of the sale price, but the administrator was keen to make sure that nothing went into or in this case, it didn't go into liquidation.
Let's turn to Germany now. What's the latest on the front when it comes to bids for the Wirecard assets there?
So Bloomberg News reported at the tail end of last week that Deutsche Bank, Germany's largest lender, had submitted a bid for Wirecard's, or some of Wirecard's German assets, including the German bank and some related companies. However, according to our report, all the non-binding bids that were submitted, along with Deutsche Bank, was considered well below the 100 million euros that the Wirecard administrator sees as a premium to proceed with a sale, again, rather than a liquidation.
And then you've got the Bundestag's Finance Committee. They're going to hold their sessions today on Wirecard. The bar is quite high in terms of them coming out with some clear guidelines, isn't it?
Absolutely. I mean, Germany or either certainly on a number of institutions for a potential failing of not spotting the fraud of the century, I guess, if you like. I mean, you know, it's a bit of a blame game focusing on the question of why authorities, including Germany's banking authority, failed to take a harder look at the payments company.
Sarah, thank you very much for running us through that. It's Bloomberg's Sarah Side. U.S. equity futures charging higher. Plenty more coverage ahead. This is Bloomberg.
Day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
This morning, Abe has resigned, Japan shaken. Now Warren Buffett will, quote, participate in the future of Japan, leaving the comfort of American multinationals. He buys into the centuries-old trading houses worldwide. Stocks advance. An earthquake, it is still at Jackson Hole. The aftershocks still being felt. Curve steepened, the real yield ever more negative. Will 1960s inflation return? In the summer of our discontent, it's not over. From Kenosha to Portland, protest and death. As Trump and Biden, they consider two different Americas. Good morning, everyone. This is Bloomberg Surveillance from New York. I'm Tom Keene. Francine Lacroix off, Anna Edwards off, Tanya Chen off. Everybody's off today. So I'm here by myself, which is a good thing. I'm really looking forward to this terrific news flow in this final week of the summer. A lot of the kids back in school as well. And you see it in the celebration of Mr. Buffett's acquisition of, I'm going to call it 5% of these major trading houses, believed to be $6 billion transaction with room to expand up to 9.9%. We see it futures up 12. Dow futures up 91 as well. So we've got a lot to talk about. American politics, the markets. We'll get right into that in a number of minutes here, and particularly the yield space and the indications of inflation to come. On this Monday, with our first word news, here's Ritika Gupta.
Good morning, Tom. Joe Biden has accused President Trump of fanning the flames of hate and violence. Biden spoke after a Trump supporter was shot and killed in Portland, Oregon, after a clash with those protesting the shootings of black men and women by police. Biden called the violence unacceptable. President Trump called his supporters great patriots. He and administration officials blamed the violence in Portland and other cities on Democratic officials. President Trump is praising Shinzo Abe as Japan's greatest prime minister ever. That's according to a White House readout of a call between the two leaders. The president spoke to Abe 2 days after he announced he was resigning for health reasons. President Trump told Abe that the U.S.-Japanese relationship is better than it has ever been. And another sign that China's economy is rebounding. One gauge of the services industry hit the highest level this month since early 2018. The manufacturing index slipped slightly, although factories reported that new orders were up. And in Belarus, thousands of protesters again gathered to demonstrate against President Alexander Lukashenko. The European Union is now calling on Lukashenko to hold new elections. The EU has rejected his claims of a landslide victory earlier this month, and they criticized the police crackdown on dissent afterwards. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thanks so much. Greatly appreciated. Equities, bonds, currencies, commodities. You're going to look down at the Bloomberg terminal. It's real simple. Stocks advance, and they advance worldwide. FTSE closed today, of course, for a bank holiday. Futures up 12, Dow futures up 83. The VIX has been really good. Some great reading over the weekend on the interesting idea of the market up and the VIX up at the same time. That is unusual, to say the least. 23.89 on the VIX with a Dow, 28,693. Yields a jumble right now, but what's important is a foot on the 2-year yield, and we got higher yields as a general statement. 30-year bond, 1.49%. The real yield, and again, this is the residual off the nominal yield, and inflation expectations. And what you need to know this morning is inflation expectations are clearly up in the United States, giving us a real yield negative 1.06. That's a bigger negative number than Thursday and Friday. What else can I say? Dollar weaker as well. Yen 105.85, euro 119.11. And Turkish lira is not giving me anything to help out today. I should note, renminbi, 6.8475 on the yuan. And that's been not only a stronger renminbi, but with some acceleration to that yuan strength as well. What we're going to do to begin the day here, for me at least, is to look at Europe and look at what happens after everyone, including Francine Lacroix, Anna Edwards, and the rest come back from their vacations. I'm kidding. Mr. Kinmouth with us. Tom Kinmouth is with ABN AMRO. He writes really, really detailed notes on bank bond dynamics. Tom, simply wonderful to have you with us. What happens in September for European banks and debt?
Well, essentially on the bank side, it's been a real success of monetary transmission. Cost of risk is below net interest margins, and the solvency of banks is actually stronger than when they started the year. That means corporate defaults are lower, and overall Euribor, which obviously a key measure of risk, has decreased. So from the regulatory side up until now, it's done really well. Yeah. Been very proactive, positioning for the future, and we're very positive on the debt dynamics going forward.
What will change, though? I mean, they've had a lot of help from ECB and others. I mean, is people in Europe set up and the city sets up to return, or what's left of the city in Canary Wharf? Great. As they return, what is the thing you're looking out for? What are you trying to observe into September and October?
Well, essentially, defaults have been moved into next year, and if not further. The coronavirus impact from now has been pushed forward. But we're not that optimistic on inflation, whether that's in Europe or the US. We think services, which is a huge part of GDP in Europe, so over 50%, a lot of countries over 50%. Next year, we're not going to get some of those heavy wage pressure dynamics on inflation. And although there's a lot of support coming, from next year we'll begin to see unemployment rise, and once again we'll be caught in this low inflation and potentially deflationary scenario. So we're not too optimistic going into Q4, for example. We expect a double-dip recession, but that is positive for a lot of bank debt. You know, the ECB will still be there, Bank of England will still be there providing lots of support, and it's kind of similar to what we see in Japan, that despite huge government spending, it's never always a bad story for spreads.
Could ABN AMRO model negative interest rates in the United Kingdom?
It's a good question. At the moment, it's not negative under our base case, I believe. It's a different mindset, I suppose, to in Europe. In Europe, the ECB has kind of tried to help every member, try to go as quick as the slowest member. There's a hell of a lot of support, whether that's TLTRO, tiering, really helping the banking sector with the monetary transmission. But it is a tougher environment then to really bounce back and try to provide a solid proportion going forward. And as you said there, the currency as well begins to negatively impact Europe.
I mean, I don't want to get you in trouble with your executives at ABN AMRO, but to be honest, the Dutch banks have an encyclopedic knowledge of merger and forced combinations in European banking. So it's pretty grim out there, but they're getting a lot of support. Are we going to get to a fragility in Q4 and Q1 where banks have to start to act and consolidate?
Well, essentially, it's a huge divergence. Equity is down about 40% for European banks this year, and debt is, total return is actually up. And that's what we're seeing. Regulators heavily protecting debt, but equity is really suffering. And as you said, if we continue to see recessions, even next year a bounce back, if the top line revenue is not growing, which we continue to see, there's still a focus on costs, and the most efficient way to do costs is to do consolidation. Forced, I suppose, is a word of when banks look forward for, say, 4 or 5 years and they see their ROE is not going to be above 10%. We see these natural kind of mergers and acquisitions, which is vaguely positive for the markets. And that's what we're kind of anticipating over the next few years. So not really as forced, but forced more on a longer term basis when looking at profitability.
Tom Kinmouth, it's too early in the morning for me to do Greek letters, but help me out here where the opportunity is. Not so much September, October. Where's the trading opportunity to play to Q1 of next year?
For us, it's high yield. Still, the highest risk as possible. We're going for AT1s, for example, versus Tier 2s. Kind of the most subordinated possible. That we continue to see very strong support. Solvency of banks is very, very strong. Really, this decade of basically forced increase in capital requirements has allowed banks to be very strong. The ECB is really hoping for monetary transmission to flow through, will really be willing to lower capital requirements, and as such, we see a huge pickup, say 250, 300 basis points potential in the highest risk debt at the moment.
Let's back up on this, folks. This is really important here. This is 2 and 3 full percentage points of move. Price up, yield down is what Mr. Kinmouth is suggesting. Can you group the German banks in there? We don't want to mention any names because it's polite company, but Tom Kinmouth, can you put the German banks into that bundle?
Yeah, essentially, it's a bit different, as you said, because we've got 1 or 2 idiosyncratic issues in Germany at the moment. You've got this continued low profitability. Bank branches, for example, density is one of the highest outside of Italy, potentially. So the German banking sector is a little different. It's a little bit more struggling with kind of structural reforms that have to occur. But essentially, German banks are high beta, and they will perform as well.
Okay, give me one other insight here. What are you going to look for this week? What are you going to observe this week as you ride into September?
Deposit increase has been really interesting.
Yeah,
the Eurozone, we've had a dramatic increase in corporate deposits.
Yeah, continue, please.
So we've had households and corporates doing it. So, for example, in March, we had a lot of corporates taking cash for liquidity purposes, a huge spike in lending, which was very good for TLTRO 2 and 3 rates. And that's just really means that going forward now, we're trying to work out how much is that precautionary? Is that looking for the uncertainty that we've seen in Japan? not much capital investment has been done. How will that go going forward? Or could, for example, it be a huge spur that households and corporates have lots of cash once we get over this corona hump, if we get a positive view on the vaccine, then there's a lot of excess capacity for spending to be done. So that's the real story, I suppose, from the last couple of weeks. Just a huge increase in deposits, and especially from corporates.
Tom Kimmon, thank you so much. Wonderful brief there on EU banking. Love to do that in this early morning hour in America. He's with ABN AMRO. There's a lot coming up here, not only framing up the end of August and into September, but the idea of the dynamics of the market. And there's some oddities out there right now. Futures up 11, equities advance worldwide. I'm going to call the markets, the bond market rather, a jumble here. We'll see to see where that goes. Kathy Jones of Charles Schwab, the 9 a.m. hour. Stay with us next, Japan. This is Bloomberg.
I think Abenomics, as a total, has succeeded, and whoever takes over would continue on this policy.
I think policy continuity is key from a market standpoint or from a yen standpoint. For one, a lot of the overwhelmingly dovish monetary policy that has yield curve control, bond buying, orchestrated by Governor Kuroda at the Bank of Japan, and he still has another couple of years, a little bit more on his term left.
This political uncertainty may raise concerns in markets about a revolving leadership. We don't
economics to the next because there's not much room that Japanese economy can deviate from this mainstream reformist strategy.
I don't blame him for not defeating deflation, but I think he's done a terrific job on the front of corporate governance.
Whoever takes over from Prime Minister Abe is likely to maintain that crucial relationship between government and central bank.
Derek Halpenny there of Bank of Tokyo Mitsubishi. Good to see him involved there with Mark Mobius and others. It has been the heritage of Bloomberg's surveillance for over 2 decades to speak of Japan. Bloomberg, of course, has had a huge commitment to Japan over the years with our terminal sales, and for all of the Pacific Rim, there's a real understanding of the importance of Tokyo and industrial and business Japan. Sophie Jackman joins us right now with Bloomberg News in Tokyo. Sophie, this Buffett transaction speaks volumes. Let us review that back to the Meiji in 1865. These are the trading houses of Japan. They are absolutely unique within the culture of Japan. What was the reaction of the elites and the people of Japan to this announcement by Mr. Buffett?
Yes, in a world of a lot of uncertainty, it's a bit of a spark of hope. Of course, this stake wasn't built up overnight. You know, Berkshire Hathaway said they've been building these stakes in these 5 big trading houses, or Solgol, Shulsha, for about a year now, and they've had to disclose because the stakes exceeded 5%. But these companies are so Japanese. They have Japanese DNA. Their heritage goes back hundreds of years. You go through their history, you see some of those huge conglomerates, in some cases that powered the Second World War and then were smashed up by the Americans after the Second World War. As time goes on, they've diversified their businesses, and now you'll see their names in many of the big joint ventures all around the world, some in infrastructure. Commodities, though, remain a backbone of what they do. So this is very much a vote for commodities. It's a vote for Japanese stocks. It's a vote for Japanese business practices and Japan's future as a whole.
Sophie, what's so important here is there were 12, I believe, and then there were 10, and there's been a lessening of them down to 5 or 6, and even some recent mergers in the last 10 years based on bankruptcy and really challenging times. Are they fragile now, or are they stronger than they were 10 years ago?
They've got to be stronger. You know, they've been through the ringer with successive financial crises, and they've started to see, although some might say it's not quite there yet, but they've started to see something of a blossoming of actual corporate governance here in Japan. And we are seeing that reflected in what they do. And, you know, the accounting practices that they have, sure, there have been scandals in Japan, but this endorsement by Berkshire Hathaway, I think, speaks to the trust that the rest of the world now has in those practices here in Japan.
Sophie, Patrick Ryan over at the Japan Times, in his wonderful series of articles on these conglomerates, these huge, uniquely Japanese multinationals, notes that part of the secret here for Mr. Buffett is it's not about Japan export, Japan import, but that these companies now have ex-Japan businesses moving between, say, Germany and China, just as one example, that have really become dominant. Is that the play for Mr. Buffett? Is the non-Japan part of these businesses?
I expect that is the case. The more diverse that they get, and the less that they have there in Japan. Of course, Berkshire Hathaway has that big currency hedge against the yen, but you will see that regardless of the direction that these trade wars go in, US, China, and all around the Pacific, and with the EU, that kind of, you know, transnational, that kind of investment that goes out of Japan and then between those major powers is going to give those trading houses something to get them through whatever the trade wars might cough up.
The incestuous nature of this is well known, going back to 1950 and then 1955 when they really began to expand. Sophie, how does the LDP, the dominant political party of Japan, how are they folded into this new relationship of Mr. Buffett's?
Gosh, I mean, the LDP has been in charge for almost all of the post-war period. We had that little blip where we had a change of government that ended in 2012 with Prime Minister Abe, who of course is now capping off his nearly 8-year run in power. But the LDP really is everywhere. They are like a giant octopus with many tentacles, and in that sense they do resemble these trading houses as well. As young people from the best schools in Japan, getting a job at one of those trading houses would be a dream come true. And in fact, if you look in Japan's parliament now, many of the big names in politics hail from those trading houses.
Right, but Sophie, this is one final question. This is really, really important for the culture of Japan and the generational shift as well. Is this the same deal where you go to work for Mitsubishi and you move from job to job every 3 years? Or is there a new way that they're trying to do business, something that Mr. Buffett would be attracted to?
Yes, I think there is, and I think this virus crisis has really laid into the open some of the changes that have been bubbling under the surface for quite some time. It's no longer the case necessarily. You get a job at one of these places at 23 and you leave at 60 and you get a pay rise every year for being there and for not doing things. That is already changing. The circumstances necessitate it, and the culture here is ready to move. It may feel a bit slow sometimes, but there is a positive feedback loop with this investment coming in from outside. And, you know, Berkshire Hathaway have said they won't get more than 9.9% holdings in each of these trading houses, but that's a big chunk. And so it's sort of symbiotic. The outside is influencing Japan, but certainly Japanese companies have a few ideas of their own.
Mr. Buffett, on his 90th birthday, changing the fabric of financial Japan. Sophie Jackman, thank you so much for the brief. Greatly appreciated from our Tokyo offices today. Coming up, we'll come back to the virus, into the pandemic. I saw an NHL hockey game this weekend. Thank you, New York Islanders, for that. Well, guess what? There was nobody in the stands. What do they do in tennis? We'll talk to Michael Dow's U.S. Tennis Association as they try to capture the magic of late August and early September, New York. We'll do that in the 8 o'clock hour. Futures up 11, Dow Futures up 79. Stay with us worldwide. This is Bloomberg.
We are above forecasts. 1,800,000 jobs is the total non-farm payrolls, with 17,000 additional jobs added in terms of net revisions.
You still got 1.8 million with a big decline, almost a full percentage point drop in the unemployment rate, which will move to single digits easily in the summer and fall.
Leading up to this data, there was a lot of reason to suggest that the pace of increase had slowed. And in fact, what we see in this data is, of course, it has slowed. But the good news is that it is continuing. And it is continuing despite some slowdowns that we're seeing around the country as a result of an increase in cases.
People tend to focus on the growth rate. The big issue is the depressed level of spending and income in the economy, which is reflected in the level of the unemployment rate of around 10%.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This Bloomberg Surveillance. I'm Rishka Gupta. Let's get your Bloomberg Business Flash. It's Nestlé's biggest acquisition yet in the health science field. The Swiss owner of Nespresso has agreed to buy Aimmune Therapeutics for $2.6 billion. That's almost triple its market value. Aimmune makes the first approved treatment for young people to help reduce allergic reactions to peanuts. China has thrown a wrench into President Trump's plan to force a sale of TikTok's U.S. operations. The Chinese government now claims it has the ability to block a sale to Microsoft or Oracle by imposing tighter restrictions on artificial intelligence exports. TikTok is reviewing the new regulations and thinks they'll make getting a deal trickier. And that's your Bloomberg Business Flash, Tom.
Rika Gupta, thank you so much. Let's look at a data check on a Monday. What you need to know is equities lift. We're to keep going off what we saw Friday. Let me give you levels here as well. Futures up 11, 35.15. I can't believe I'm saying that. 3515 on the Standard & Poor's 500. Dow 28,681, up 69 points as well. VIX up a stick. Again, this is the oddity here of the short squeeze out there. 24.02 on the VIX. We'll get a better number as we get closer to 8:30. Coming up, must watch on tech. This is Bloomberg.
Me gustaría decirle a los empleadores que fueran más humanitarios con sus trabajadores, que les hagan valer sus derechos. Y estábamos viviendo en dos casas, en unas 50 personas y en la otra otras 50. En cada casa había 5 habitaciones. En cada habitación había de 3 a 4 camas abarrotadas. Vivíamos de 6 a 7 personas. Un baño para cada habitación y una cocina para todas. Una vez que nos atendieron en el hospital, al salir nos avisó una compañera que ya nos habían reportado a migración. Gracias a Dios ahorita de salud yo estoy muy bien, pero en lo moral no estoy muy bien, porque a causa de esa enfermedad yo perdí todo, perdí mi trabajo. Yo creo que mi caso resulta un gran problema de cómo las personas migrantes estamos en riesgo de explotación por parte de los empleadores.
The investment bank merger is something we have been discussing actually for months. This is not a cost exercise. There will be some cost benefits, but it's really about having one underwriting business, to have one investment bank globally, one equities business.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg Surveillance on a summer Monday morning. We're dragging you to the summer end here and getting ready for September, which I think shows up in the vicinity of like tomorrow. How did that happen? Anyways, we welcome you, and of course, huge news flow. We'll get to that through all of Bloomberg Surveillance this morning. Right now, this is a really cool conversation. It's a little bit off the radar. He's with Hoxton Venture Partners, which is one of these tech shops out of London, and they do lots of startups and all that. But far more importantly, Hussein Kanji brings to technology everything out of Stanford Symbolic Systems. This is one of the coolest majors in America. It's equivalent to maybe what Oxford PPP was or Williams PPE 100 years ago, 80 years ago, whatever. It is just absolutely cool melding of technology and psychology and behavior. We're thrilled that Hussein Kanji could join us this morning. Hussein, I want to take the Apple stock split as a symbol of tech maturing. Is tech maturing as these giants get ever bigger and bigger and bigger, or will it be the same Silicon Valley forever?
I think Silicon Valley is never the same thing. It keeps morphing. I think the big difference now is Silicon Valley has such an impact on the rest of the world. And quite honestly, I don't see that changing. I think tech is very much embedded in kind of our way of life today. And all those things that we talked about in the dot-com bubble about tech being really big are now coming into fruition. Is like 3, 4, 5 billion people are online and using their devices pretty much every single day. What's the arrogance meter that you've got at Hoxton Ventures right now? You go out there and, we don't need stock splits. We can go to $1,000, $3,000 a share. Apple, if it wasn't split, would be $28,000 a share. Do you see the arrogance changing into something constructive where all of them feel that they have to split, that they have to become more accessible to global finance and investment? Well, I think stock splits in general, as you said, usually have to split to become more accessible to the institutional investor. I don't think it really makes that much of a difference, but to the retail investor, it really does. I mean, it's really hard to afford a $28,000 security. So you do have to split, and usually these days about 25% of the stock market right now is about retail investment, especially since the pandemic. It's up from the historical about 10%. So you really do want to cater. The only caveat is these days a lot of these commission-free brokerages like the Robinhoods, yet another tech company, are now offering fractional shares. So it really doesn't matter what the stock is priced at. It kind of matters what you can afford, and they'll kind of. Well said, Hussein. But what I find fascinating here is the social and cultural pressure to be not the tech boys distant, but to be more accessible. I mean, Terry Winograd, who you studied at Stanford, is iconic on this. I mean, is there a way here for tech to be more accessible by signaling stock split? Well, I mean, I think tech is becoming more accessible just because of fractional shares, and so these commission-free, brokerages are enabling anyone to kind of invest, which is why you've seen retail. I think the bigger and wider question is what's kind of the responsibility of the tech giants and the tech industry as a whole as we become more and more become a bigger and bigger part of the economy. Mark Benioff was not scathing, that would be too strong a word, but Mark Benioff was rather sharp the other day in a Bloomberg interview where he spoke of the philanthropy, the visible philanthropy of these tech giants. Have they been philanthropic enough? They're still, I think, immature organizations. Some of them are. I mean, and you've seen the Bill and Melinda Gates Foundation. It's usually the founders of these companies, and you've seen the Mark Zuckerberg and Priscilla Chen Foundation as well. But as organizations, I think the tech industry is still catching up to how significant it is. I don't think it's taking on the responsibility to wider society as deeply. These are still, weirdly enough, immature organizations are kind of like teenagers, and they're still growing up, trying to figure out where their place is in the world. And as they get more and more prominent, there's more and more responsibility on them. Where is their this is critical, folks, and this goes back to symbolic systems at Stanford. Where is their place in the world if they don't want to repeat the mistakes that they fear of industrial America? Think Clay Christensen, where they get stagnant and they get soggy. How do they avoid those traps? That's a really good question. I think that's the big discussion that's happening within the tech industry. There's certainly enough critics from within the industry. Mark Benioff is one. Jaron Lanier, who founded Virtual Reality, is another one. One of the early investors in Facebook Roger McNamee has written a scathing critique of the Valley. Yes. I mean, I think this is the big question. I think that the Valley kind of needs to grapple with over the next 10 years as these companies become so important to the world, what's the responsibility of them and their founders and their executives and their board members to kind of keep and balance that with the responsibility to society, not just to the company.
Well, who's going to lead that? I mean, let's go to Roger McNamee and his ability to play a Gretsch guitar, which is widely understood. But if Roger's scathing in his criticism, what's going to be the catalyst for Amazon? And, I don't want to pick on just the big companies, but what's the catalyst to move to an industrial maturity?
Well, I think it's going to be fits and starts, and I think it's going to be a conversation. I think, you need to embed that maturity into the conversation. I don't know what Stanford's teaching these days in programs like SimSys or computer science, but I'd imagine kind of the ethical responsibility of computing or the ethical responsibility of business is probably going to be part and part of the curriculum. These organizations never knew that they were going to be so significant so fast. It's not like Facebook 15 years ago knew that it was going to be able to, basically be able to shift world politics because of its platform. And it still has a little bit of growing up to do in terms of figuring that out. But I have confidence that there's enough of a dialogue happening within the industry that I think the industry will figure it out. And it's not like the industrial giants, the Rockefellers and the Carnegies, figured this out during kind of their golden age of industrialization. They kind of figured it out towards the tail end and then built these very large kind of endowment cultures. So I have a little bit of hope. I think things happen really fast in the tech industry. They don't look like they're happening very fast sometimes because we're so much of a daily cadence or weekly cadence. But I think these conversations are happening much faster than they were in, say, the Roaring 20s within the industry.
Hussein, I got to make some money here. Is it a lock that Amazon will do a 10-for-1 stock split?
I think if it keeps growing, I think more and more of these companies, as their share price gets bigger and bigger, are more likely. And weirdly enough, stock splits shouldn't cause any change in the financial share price of the, because it's the same. But they do, and there's lots of academic research on this. There's usually like a 5-10% uplift at a minimum.
Don't be a stranger. Hussein Kanji, thank you so much with Hoxton Ventures Partners today. Really a look there, folks. This is a huge, huge debate, and I'm going to make clear, forget about all the CFA talk about the mathematics of a stock split. Nobody cares. Baloney. Look what's happened to Salesforce entering the Dow. Look what's happened to Apple shares off this announcement of the stock split. I'm sorry, like lemmings off a cliff, they're all going to go that way. Not that I would editorialize on that. I would editorialize at a value on a Monday morning. Your first word news. Here's Ritika Gupta.
Thanks, Tom. President Trump called for law and order in a tweet storm following the death of one of his supporters in Portland, Oregon. The man was killed in a clash between Trump supporters and Black Lives Matter demonstrators. Videos showed some members of a Trump caravan that rolled through Portland shooting what appeared to be tear gas and paintballs. Some Democrats say the president encourages unrest because he sees it as a plus for his campaign. President Trump's intelligence chief is defending his decision to restrict congressional briefings on foreign interference in U.S. elections. John Ratcliffe says he'll primarily brief through written materials, but he ruled out what he called all-member briefings because of the threat of leaks. Democrats say Ratcliffe is only doing President Trump's bidding. And the head of the U.S. Food and Drug Administration promises transparency when it comes to reviewing potential coronavirus vaccines. Stephen Hahn tells Bloomberg that data will dictate what kind of decision is made. President Trump has accused the FDA of slowing vaccine and drug work to hurt him politically. And another sign of improving diplomatic relations in the Middle East. An El Al Israel Airlines plane flew through Saudi Arabian airspace for the first time. The flight was on its way to Abu Dhabi in the United Arab Emirates, which agreed to establish ties with Israel. Global News, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. You need to recalibrate on the equity markets here. Again, futures up 11, Dow futures up 74. No one better to do that with than Christopher Marangi. He's with Gabelli Funds, their co-chief investment officer. Just not on media, not on the stocks you associate with the Gabelli shop. Chris Marangi here on the greater market, the courage to stay in the market. The real yield, a negative 1.06 at the 10-year timeline. Stay with us. A beautiful London with Francine Lacroix not there. Anna Edwards not there. Nobody's there. There's no one in London. London is closed today, but it's a beautiful St. Paul's. This is Bloomberg.
you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Bloomberg Surveillance. Good morning, everyone. Tom Keene. Francine Lacroix is off today, along with most of London closed. FTSE closed down today. It has been a fascinating set of days since Chairman Powell's important speech at Jackson Hole. Bloomberg finished strong last week with Robert Kaplan of the Dallas Fed in conversation with our Michael McKee. He was delicate in his interpretation of his chairman's speech, and he was particularly delicate about the statistic 2%. Let's listen.
It's possible that it will take a while to get to 2%. Technology-enabled disruption, in particular, are limiting the pricing power of businesses, and inflation has been muted for close to 10 years. And so part of this policy articulation is really a reaffirmation of the situation we've been operating in and our decision function for the last few years. It's not a radical shift. It's an affirmation that we've been in a more muted inflation period. We need to be alert that that could change, but I don't view this policy articulation as a radical change. It's a reaffirmation of the way we've been operating.
Well, so the new policy is that, quote, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time. How do you define moderately above, and how do you define some time?
Yeah, and we've left it deliberately undefined. To me, price stability is still our dual mandate. It's full employment and price stability. 2% is our best indicator of that. And so for me, what it means is if we're running, if we get in the situation, I hope we do in the next couple of years, where we're running closer to full employment, I'm willing to take a little bit more risk and have a greater tolerance in my monetary policy judgments that inflation could run a little bit above 2%. And for me, a little bit means a little bit, in that I've said publicly, 2.25, maybe a little bit more than that. I still think price stability is the overriding goal, and this framework doesn't change that.
Well, why isn't this a return to 1960s style Fed policy, trading off inflation for lower unemployment? Because, of course, that didn't end well.
Yeah, and that's a danger. That's a danger. And so it's not that I'm going to lose a concern that we could have a spike in inflation, and I'm not going to lose a concern. And in fact, this framework articulates a concern about financial stability. I think those concerns haven't gone away. It just says on the margin, this is my interpretation and the way I'll be operating, on the margin, I'm willing to take a little bit more risk in service of getting underrepresented groups into the labor force, a little bit more risk on inflation. But I am not, for one, going to be willing to take risk that we'll lose price stability a la the 60s and 70s. I'm going to be on guard against that.
Well, there's also a concern out there that an overrepresented group, people on Wall Street, are going to be the real beneficiaries here, that you may not be able to stimulate a lot of economic activity or inflation, but you sure can pump up the stock market.
I think that's also something we have to be cognizant of, and in particular, not just on the Fed funds rate, but also on our purchases of treasuries and mortgage-backed securities and the 13.3 programs that we've implemented this year. I think it's very important that we articulate that those programs will lapse, and I do think we need to be conscious of financial stability and excesses that could build as a result of our policies. And I will view that as an important consideration as I make judgments going forward.
Well, if you were still at Goldman Sachs looking at your Bloomberg terminal, would you think that maybe we see some bubbles forming now?
I I would be concerned that when the Fed takes the type of actions we've needed to take this year, you have excesses in risk assets, not just prices, but what I'm particularly concerned about is debt buildup.
Robert Kaplan, a really interesting speech. Michael McKee with an exceptionally strong week last week. He can't do that again this week. That's just like impossible. But what an interesting Jackson Hole, to say the least. Coming up, we will continue the pandemic. We need an update. Cases are better, deaths are better. Those dynamics are wonderful, particularly here for New York City. It has been remarkable, the improvement in the greater New York area. Joshua Sharfstein will join us from the Johns Hopkins University. Monday starts strong, futures up 11. Stay with us through the morning. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get your Bloomberg Business Flash. The U.S. airline industry is coming up with ways to get more travelers on board. United Airlines has put an end to its much-hated $200 change fee for domestic flights. Meanwhile, American Airlines is adding service to warm weather destinations such as Florida and Mexico. That's after cutting flights in October by 55%. China's biggest banks have suffered their worst profit decline in more than a decade. The problem, a cascade of loans to businesses that are going bad. Profit fell at least 10% in the first half of the year at the four biggest Chinese banks. Loan loss provisions rose as much as 97%. And Ant Group's potentially record-sized IPO could propel tech capital raising past the heights of the dot-com bubble. Jack Ma's financial titan aims to raise at least $30 billion in October. That would push first-time share sales by tech firms to the highest since 1999. Investors have been piling into tech despite global uncertainty. And that's your Bloomberg Business Flash. Tom?
Ritika Gupta, thank you so much. Long ago and far away, think 15 years ago, I believe I was sitting in an office with the editor-in-chief of Bloomberg News, Matthew Winkler, and we were trying to figure out how Business Week would recover from an insider trading scandal that involved people sneaking into their printing presses to get a copy of Business Week 6 hours, 10 hours, 12 hours early. Things have changed. Joining us now, the emeritus of Bloomberg News, full disclosure, the guy that hired me. It's his fault, folks. Matthew Winkler joins us. Matt, your new article is an absolute tour de force from how we've changed from that time 15 years ago. It's not about Business Week anymore and stealing a magazine early, is it?
No, it's not, Tom, and good to be with you. There are so many technological tools today that make it possible for people with inside information, that is information about an event before it's disclosed to the public, to act on that information. And there are all kinds of derivatives, for example. There are all kinds of securities that one can choose to use to benefit from such inside information. And at Bloomberg, we have the capacity to look at the breadth and scope of financial markets and to see unusual trading patterns and other activity that corresponds to what we would call insider trading.
Nicely explained, but Matt, it's the other activity that's fascinating in your opinion piece. I mean, you're getting into not so much emails, but just information queries about a potential company.
Yeah, so look, if you know something is up, then what you are going to do is look for ways to take advantage of it. What we can see, using our own algorithms at Bloomberg, what's called automated intelligence, is we can see the frequency of people, say, searching for articles about a company. Mm-hmm. We can see, for example, whether the trading is greater than the 20-day average when its weekly gain is, insignificant. We can see that bonds are changing hands at a far greater rate than they would ordinarily. We can see that the volume of trading in the equity market is much greater. All those things, when you put them together, they show you a pattern, and the pattern is inescapably leading you to the handiwork, if you will, of insider trading. And, the most recent example of that is this month. This is the last day of August, but earlier this month, Google bought a 6.6% stake in ADT Inc., which is the largest home, U.S. security company. And ADT appreciated, 100% as soon as the stock market opened. But the headlines that were detailing the transaction really weren't a total surprise, because clearly a few people knew what was going on. And as I said, we know that because the frequency of people searching for articles about ATD and reading them exceeded the 30-day average. We know that. Sorry, go ahead.
No, Matt, just quickly here, we've got time for one more quick question. Is the SEC using these tools? Do they have a Bloomberg terminal where they can actually get out front of the potential crime?
They do have Bloomberg terminals. Lots of regulators do. But so far, we have yet to hear from the regulators on any of this. So it's a bit disturbing because, there are numerous examples going back now more than 2 years. And we can see them. And that was the whole point of this. My colleague Shinpei and I, and really the team that created Bloomberg Automated Intelligence, they're really doing the hard work, and this is an amazing thing. So people who have the Bloomberg terminal can see that this is happening. They know something's up, and they know something's up long before a deal is announced.
Matt Winkler, thank you so much. Our editor-in-chief emeritus, a really hyper detailed article, folks, for Global Wall Street. It's a must-read simply because of the detail involved on ADT in that purchased by Google as well. Let me do a data check right now. On a Monday morning, it's a pretty simple market, and we still have this oddity of the VIX up. Futures up 11, Dow futures up 77, which means the VIX is supposed to come in. A lower statistic, wrong. 24.02 up a full stick right now in the VIX. We'll have to see how that unfolds as we get to the market open 9:30 this morning. I've got mixed bond market right now. The excuse me, the 10-year yield to 4 digits, 0.7195. We can round that up to 0.72 without being wrong. Gold, -$4 an ounce, 1971 the ounce. I would make note of renminbi strength, 6.85 on Chinese yuan. Coming up, this is important, Russ Kosterich with BlackRock. Stay with us. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
The rapidity with which we are moving relates more to technological advances in how you can make a vaccine even before you start testing it, that makes me confident that we are going to do everything we can to determine safety.
This morning, well, Abe has resigned. Japan's shaken. Now Warren Buffett will, quote, participate in the future of Japan, leaving the comfort of American multinationals he buys into the century-old trading houses worldwide. Stocks celebrate. An earthquake at Jackson Hole and the aftershocks still being felt. Curve steepen. The real yield ever more negative. Will 1960s inflation return? And the summer of our discontent, it is not over. From Kenosha to Portland, protest and death. Is Trump and Biden considered two different Americas? Good morning, everyone. This is Bloomberg Surveillance. I'm Tom Keene in New York. Francine Lacroix off. Anna Edwards off. London off. FTSE closed. As we see the sunrise in New York, there's no question about it. An eventful first Monday of the last week of this summer. Just lots to talk about. As I said, futures up 10, Dow futures up 64. Some dollar weakness this morning as well. And we've got a really, really important conversation coming up on the courage to be in the market. Russell Kosterich will be joining us with BlackRock, and he has been on fire, as they are wont to say. With our first word news, here's Ritika Gupta.
Good morning, Tom. Joe Biden has accused President Trump of fanning the flames of hate and violence. Biden spoke after a Trump supporter was shot and killed in Portland, Oregon, after a clash with those protesting the shootings of a black man and woman killed by police. Biden called the violence unacceptable. President Trump called his supporters great patriots. He and administration officials blamed the violence in Portland and other cities on Democratic officials. President Trump is praising Shinzo Abe as Japan's greatest prime minister ever. That's according to a White House readout of a call between the two leaders. The president spoke to Abe 2 days after he announced he was resigning for health reasons. President Trump told Abe that the U.S.-Japanese relationship is better than it has ever been. And another sign that China's economy is rebounding. One gauge of the services industry hit the highest level this month since early 2018. The manufacturing index slipped slightly, although factories reported that new orders were up. And in Belarus, thousands of protesters again gathered to demonstrate against President Alexander Lukashenko. The European Union is now calling on Lukashenko to hold new elections. The EU has rejected his claims of a landslide victory earlier this month, and they criticized the police crackdown on dissent afterwards. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg, Tom.
Ritika, thanks so much. And the dollar, we're a little weaker dollar today. Yen 105.92. The yen weaker. Euro stronger 119.15. And that obviously means euro yen back out 125 out to 126. So pros folks take the dollar out. They look at euro and yen relationship there, and that can be a real important statement of the dynamic of the three major nations. And right now it's euro stronger, yen weaker. I'd also notice renminbi stronger this morning, and there's an acceleration to that on a log chart. Yuan 6.85 yuan to 4 digits, 6.8492. Turkish lira churning at a 7.36. Real yield was a negative 1.06. Does a little better here, a lesser negative yield. Usually with a guy like Russ Kosterich, we will talk philosophical, we'll talk thematic, we'll look at strategy, but we're not going to do that today because Russell Kosterich, academic, attorney, and CFA charter holder, has hit the ball out of the park for the last year. The BlackRock Global Allocation Fund 12-month performance is stunning. There's any number of ways of measuring this, but what you need to know is where so much of institutional investment is lagged, Russ Kosterich has been on fire. Russ, let's take a one-year look back. What did you think about a year ago that you got right?
Well, Tom, first of all, thank you for that very gracious introduction. I'd say the biggest thing we got right a year ago was that we've been in the right places when we look for stocks, and that's meant an emphasis on a lot of the secular growth themes that we're talking about every day. And that's kept us, through the volatility in March and the rebound the last 6 or 7 months. That's been the one common theme in the portfolio. Overweight the U.S., overweight a lot of these secular growth themes, including technology, communication stocks, and thankfully that's worked out well for our shareholders.
To look forward, you speak of a different decade, a different portfolio. How different is that portfolio from where you are right now?
Well, I think it's more changes at the margin than a radical reshift. So certainly we are adding to places that we were a bit more underweight or less overweight, 4 or 5 months ago. We have been tactically adding to Europe. We've been looking for parts of the economy, both in the U.S. and outside the U.S., that have a bit more cyclical exposure, whether they're transports, rails, capital goods, semiconductors, because we do think the recovery is going to continue. Those are some of the changes. The other change is the role of bonds in a portfolio. You think about where yields are today, there's just not as much of an ability for them to drop much further in the U.S., which means we still think bonds are useful as a hedge. They're not as efficient of a hedge as they were 12 months ago.
Well, let's take it to the Sharpe ratio, folks. What we do here is we take beta, we take some of the fancy math out of all this stuff, and we look, first of all, at the risk-free return. Russ, how can we gauge excellence if we have no clue where the risk-free return is?
Well, I think it becomes becomes a couple things. One, you're obviously, and at the end of the day, people are very focused on absolute returns.
Yes.
Whether you're a pension fund, whether you're a retiree, you need a certain level of income. You need a certain return to fund that retirement. And a lot of what's going on right now, I think why equities continue to grind higher, why spreads and high yield continue to tighten, is people are looking for yield, whether that's coming from equities or from credit, and finding quality wherever they can. And that trend is likely to continue because, as the Fed has been telling us, rates are likely to stay low for a very long period of time.
I look, Russ, at the mathematics is sharp, and of course, all it comes down to is somewhere in the numerator is a diversified portfolio. But how diversified are you? Are you doing a Sequoia equivalent here where you own 7 stocks?
No, we're not. We're not quite that concentrated, but we have been concentrating. But, Tom, you raise a really important point, and not to get too geeky, let me talk about that ratio for a moment, because I think it's so important for investors. Bonds have been your main diversifier.
Yep.
That's what's hedged your equity risk. And the challenge is the numerator of that equation. Bonds and stocks are still tending to move in opposite directions. The Fed has your back. The problem is the denominator. And what's happened is bond volatility has collapsed as the Fed has really came in there and supported the market. Equity volatility is much lower, but it hasn't collapsed as much. Vol is still twice where it was back in February. That's the challenge. Bonds don't have as much volatility as stocks. It makes them less efficient as you're trying to hedge that equity risk.
So what's the optimal diversifier? You're going to tell me gold? Larry Fink's going to fall off his seat.
I'm not going to tell you gold. Gold is part of it. There is no optimal diversifier. There is no silver bullet. It is a combination. We still have long duration U.S. Treasuries in the portfolio. We have some gold, but it is by no means a magic bullet. You look to the derivatives market, depending upon the level of vol. You look to currencies. So I think it really is much more of a mosaic approach than it was for the last decade, where you could buy the long bond, go to sleep, and do really, really well.
Okay, but come on, Russ. You're a student of this, the history of this. Kate Moore, same thing. You guys are historians. The way people solve this is they leverage up. Every time that's the case. Are we leveraging up right now in our bets, in our optimism?
I think people are being optimistic. There's a lot of optimism that you're going to see a vaccine. This has certainly powered the market the last few months. But I do think some of the optimism is justified. If you think about where we are for 6 months ago, the economy is recovering. You have a lot of liquidity in markets. And the third thing, which I think goes back to your original question, what have we been doing? There are still a number of companies out there that not only are world-class, but actually have business models that ironically have been supported by the pandemic. And you've seen this acceleration, whether it's online shopping, 5G, the Internet of Things. That is likely to continue. That's where some of that optimism resides.
I look, Russ, at where we are, and folks, I want to change the dialogue here to go with the news. Absolutely extraordinary, Russ. Mr. Buffett's purchase in Japan. You're looking here, folks, at 5% dividends, some of them with some substantial dividend growth, trading with PEs of 9, 10, 11. However, the funny Japanese accounting there is, I got to be careful. Russ, what were your thoughts when you heard that Mr. Buffett has gone long the centuries-old trading companies of Japan?
In some ways, it makes a lot of sense. I mean, clearly, given the run we've had in the market, there aren't that many bargains out there. Japan is an interesting market. It's very dominated by international investors. In other words, it goes up and down based on capital flows. You've got companies that dominate that index that are very cyclical, including the one that Mr. Buffett bought. And what that means is that Japan can do very well when there's optimism, the global economy is accelerating, but you're very hostage to that theme. So we've actually been underweight Japan. We've actually found better opportunities in other parts of Asia. But look, a lot of respect for Mr. Buffett. And as I said, that's probably one of the few places you're finding bargains today.
And Russ, what's so important here is the impatience with Japan is an impatience with an embedded management style. Does BlackRock, with all your research capabilities there, do you see a generational shift to a different, more open management style?
I think you can find companies in Japan, and we certainly are long a number of them in the semi area, in some of technology that are going to benefit from the trends we're talking about. So I'm a little reluctant to characterize the whole Japanese corporate sector. I'd say the challenge in Japan, why has the Japanese market struggled? Well, for some of the reasons that up until recently the European market struggled. You think about what makes up that market. You've got a lot of old economy stocks. You've got autos. You've got banks. Those have been businesses that in many cases have been structurally challenged